Imagine waking up tomorrow to a news alert that fundamentally alters the financial landscape of an entire nation and potentially your own personal wealth. Picture a simple, tangible change, something you can hold in your hand, that signals the culmination of decades of economic struggle and international speculation. This is not a drill, and this is not more baseless forum hype. What I am about to walk you through is a developing situation on the ground in Iraq. A situation that has sent shockwaves through the community of currency observers and investors who have been patiently and at times skeptically waiting for a sign, a real, physical sign, that the gears of monetary reform are finally turning. The sign we are talking about is the emergence, the confirmed spotting of smaller denomination Iraqi Dinar notes in circulation. Now, before you dismiss this as another recycled rumor, I want you to consider the profound, multi-layered implications of this single development. This isn't just about the convenience of having smaller bills for buying a cup of coffee. This is about the very foundation of a modern economy. For years, the Iraqi dinar has existed in a state of limbo, with its value artificially managed and its practical use hampered by the lack of small denominations, which essentially signals an economy not functioning on a day-to-day retail level for its citizens with a strong currency. The primary note, the 25,000 dinar note, is worth so little in practical terms that it necessitates carrying bundles of cash for simple transactions, which is inefficient, insecure, and a constant reminder of the currency's low purchasing power internationally. The appearance of lower value notes, think 1,000, 5,000, and even 500 dinar notes becoming more commonplace, is a deliberate and calculated move by the Central Bank of Iraq. It is a move they would not and could not make unless they were supremely confident in the stability and future value of the currency they are issuing. Think about it logically. If you are a central bank governor and you believe your currency is about to collapse or remain hyperinflated, you print larger denominations, not smaller ones. The act of introducing smaller notes is a powerful non-verbal communication to the Iraqi people and the world. It says, we believe in our currency. We believe it will have significant stable value per unit, so much so that you will need these smaller denominations for daily life. This is a cornerstone of what economists call de-dollarization. For years, Iraqis have used US dollars for major purchases, real estate, and even car sales because of the instability of the dinar. The physical unwieldiness of the large dinar notes made the dollar the preferred, more efficient option. By making the dinar more user-friendly and functionally efficient for a modern economy, the central bank is actively incentivizing its citizens to trust and use their own national currency. This is a critical psychological battle that must be won before any significant revaluation can be contemplated. It builds domestic confidence, which is the bedrock upon which international confidence is built. Without the people of Iraq believing in the dinar, no amount of foreign investment or international agreement can force a sustainable RV. This move is therefore the first, most crucial step in a carefully orchestrated sequence of events leading toward a fundamental reassessment of the dinar's international exchange rate. It is the priming of the pump, the setting of the stage, and it is happening right now, not in whispered meetings, but in the wallets and marketplaces of Iraq. This is the context you must understand before we dive into the deeper economic signals. And if you're grasping the monumental importance of this, just wait, because in the next section we will connect this physical change directly to the official statements and hard economic data coming from Baghdad. But before we move on, if your mind is already reeling from the implications of this discovery, do me a favor and hit that like button right now and subscribe to the channel with notifications on, because what we are covering today is a fluid, breaking situation, and you will not want to miss a single update as this story evolves. So we've established that the sighting of small notes is a monumental psychological and practical shift within Iraq. But a nation does not reform its currency in a vacuum. This physical change is happening in perfect concert with a barrage of official policy statements, legislative actions, and international financial maneuvers that all point towards a single, undeniable conclusion: preparation for a new exchange rate paradigm. Let's connect the dots between the notes in the street and the decisions in the halls of power. The Central Bank of Iraq has been unequivocal in its public statements over the last year, repeatedly emphasizing its commitment to a three-pillar strategy: strengthening the Iraqi dinar, reducing the dependence on the US dollar in internal transactions, and integrating the Iraqi banking system with international standards. The introduction of smaller denominations is the tangible, public-facing element of this first pillar. It is the proof that their policies are moving from white papers and press conferences into the hands of the populace. Furthermore, the Iraqi government has been aggressively pursuing agreements with international partners, particularly in the realm of trade and energy. They are strategically pivoting towards economic relationships that are not solely dollar-denominated. Why is this relevant? Because for the dinar to be revalued, it must be a desirable currency to hold for reasons beyond mere speculation. It needs to be a currency that can be used for international trade. If Iraq is selling its oil or other goods to China, India, or European nations, and accepting payment in currencies other than the dollar, or even in dinar, it creates a natural, organic demand for the dinar on the global foreign exchange markets. This is a fundamental shift away from a petrodollar system that has constrained the currency's potential for decades. Now let's talk about the banking reforms. You may have heard about the intense pressure from the US Treasury on Iraqi banks to comply with international anti-money laundering and anti-terrorism financing standards. While this has caused short-term transactional headaches, the long-term effect is to cleanse and fortify the Iraqi financial system. A strong, transparent and trusted banking sector is an absolute prerequisite for a strong currency. International investors and large financial institutions will not touch a currency if the banking system behind it is seen as opaque or risky. The rigorous compliance now being enforced is essentially a painful but necessary detox for the Iraqi financial body. It makes the country a more credible and safer destination for foreign capital. When you combine this fortified banking system with the strategic creation of trade partnerships that generate demand for the dinar, you have a powerful recipe for a currency that is primed for a revaluation. The small notes are the visible tip of this enormous iceberg of reform. They are the part of the iceberg that ships, the everyday citizens and global observers can see. But beneath the surface is a massive structure of policy, compliance, and international diplomacy that gives that visible tip its stability and momentum. This coordinated effort signals an imminent move not because of wishful thinking, but because all the pieces of the puzzle are being deliberately and publicly put into place. The timeline of 2025 that is often discussed is not a random guess. It aligns with the culmination of many of these reform programs and the expected fruition of these new trade relationships. The system is being prepared to handle a currency of significant value, and that is the most compelling data point of all. Now, as we piece this all together, it's crucial to understand what this means for you, the global investor, and what the realistic expectations should be. The final piece of this puzzle is the human element, and that's exactly what we will break down in the final segment of this report. And if you're starting to see the full picture emerge and appreciate the depth of analysis we provide here, I need you to take a second and comment "confirmed" down below. It massively helps the channel's reach and lets me know this crucial intel is getting through to you. We have navigated the physical evidence of the small notes and decoded the official economic signals pointing toward a reformed financial system. Now we arrive at the most critical and most misunderstood part of the conversation: the practical implications and the strategic mindset required to navigate what comes next. The multi-trillion-dollar question is, what does this actually mean for the world, and more specifically, for someone like you who is informed and paying attention? First, let's dismantle a dangerous myth: the idea of an overnight, miraculous flip-of-a-switch revaluation that instantly creates millionaires. This fantasy is peddled by gurus selling hype, and it is a disservice to the complex reality of global economics. A more realistic and ultimately more stable scenario is a managed strategic adjustment of the dinar's value over a defined period. Think of it not as a light switch, but as a dimmer switch, gradually increasing the currency's brightness and value in alignment with the strengthening of Iraq's economic fundamentals. This could involve an initial significant adjustment, perhaps to a level that reflects a more realistic purchasing power parity, followed by a period of managed float, where the currency's value is allowed to find its natural level in the market based on demand and supply, all under the watchful eye of the central bank to prevent destructive volatility. This managed process is what entities like the International Monetary Fund often guide countries through, and it is the most probable path for Iraq. So, what would this mean in practical terms? A successfully revalued dinar would signal Iraq's full return to the international community as a sovereign and economically robust nation. It would unlock unprecedented foreign direct investment, not just in oil, but in infrastructure, agriculture, technology, and tourism. For the global investor, this presents a mosaic of opportunities far beyond the currency itself. Yes, holding dinar could be part of a strategy, but it is arguably the most speculative. A more diversified approach would be to look at Iraqi stock market ETFs, or to invest in multinational corporations that are poised to win massive contracts for the rebuilding and modernization of Iraq's infrastructure, a process that a strong currency would accelerate exponentially. Your focus should be on the economic renaissance of a nation, not just the ticker symbol of its currency. This is where true generational wealth is built, by identifying a nation on the cusp of a transformative leap and positioning yourself in the avenues of its growth. However, this opportunity is inextricably linked to extreme risk. The political landscape in Iraq remains fragile. Regional tensions can flare up and derail the best-laid economic plans. Corruption, while being addressed, is a persistent enemy. Therefore, any foray into this space must be done with capital you are fully prepared to lose. This is not a savings account. This is a high-stakes, high-reward frontier market investment. Your strategy should be one of patience, due diligence, and a commitment to following the verified data, not the social media frenzy. The emergence of the small notes is the strongest signal we have had in years, but it is not a guarantee. It is a green light indicating that the process is actively underway, making this the most critical time to be informed, vigilant, and strategically patient. The information we have covered today is your foundation. Now the responsibility to act or not to act rests with you. Do not get caught up in the emotional whirlwind of hope and fear. Base your decisions on the tangible evidence, the official policy, and a clear-eyed assessment of your own financial goals and risk tolerance. The road to 2025 is being paved right now, and for the astute observer, it is a road filled with both peril and extraordinary promise. And with that final thought, I have to make one last crucial request of you. If you found this deep dive valuable, if it provided clarity where there was confusion and facts where there was fiction, then you need to be a part of this community. Do not be a passive spectator. Hit that subscribe button, ring the notification bell, and share this video with one other person who needs to see this reality check. The conversation is just beginning, and your engagement is what fuels this channel's ability to bring you this level of uncompromising, intelligence-driven analysis. The next update could be the one that changes everything, and you need to be the first to know. Stay sharp, stay informed, and I will see you in the next video.